often as we get wrapped up in all the excitement of the year end, we do tend to overspend in the month of December. Then, when January comes around, as it always does, we find ourselves not having enough money to pay for things like medical aid, car insurance, or even life cover. But most people get paid early in December, and this often leads to most people struggling in January. But joining us now to explain how one can create a successful savings and investment strategy is Ms. Dikeledi Silwane, a director at Matsoba Nemeja Business Consulting. Ms. Silwane, good to have you with us this evening on News at Prime. Now, as we look at finances this time of the year, it's the beginning of the year, but the remnants of 2021 and all its responsibilities still lies with us. How would you say is perhaps the best way to enter a new year, considering that there's still a long 12 months ahead, but you're still carrying the baggage, and specifically the financial baggage of 2021?
Correct. Yeah. Thank you very much for having me this evening. I will actually say if you are lacking at this point already, it's going to take a bit of time for you to recover. So the best way is that we plan ahead. So planning ahead will mean that it doesn't matter whether it's Christmas or it's festive season, we are happy. That doesn't mean that we need to now not plan or overspend. So we need to know already in, say, October, November, that, okay, I'm budgeting for entertainment, if that is entertainment that you are going to be indulging in, or other matters like grocery, food, and all those things. We need to plan. So we need to already have money for that. We have budgeted for that. So we need to plan ahead. It's not a matter of starting now in Jan to say, I need this, I need that. So we need to make sure that we start earlier before the festivities.
So looking at where we are right now, how does one then start planning? Some practical tips of how you can start planning for the year ahead.
Yes. So now, right now, let's say maybe for argument's sake, you have made mistakes, you are out of budget now, you don't know where to start. Obviously, that means you are now going to start borrowing. That for me, it tells me that you are living beyond your means. So you overspend. So now what I can advise that is you start from day one to now start adjusting. Make sure that you write a budget, have your budget, you write the stuff that you need, you at least compile a list of the items that you need. You start with the most important ones, you prioritize. So make sure that when you get your salary at the end of January, at least you are you already know your income, so you know what I need to spend where and how much, and you also need to at least have a bit to save. So have savings, treat treat the savings as like an expense, though it's not expense, but make sure that when you draft a list as well and include savings as well. That way it will be better, because at least you'll have emergency funds on your side when there is anything that you need to spend on at that time, or whatever that you plan like for the future.
Would you suggest and advise that a person tries to bring down their debt as much as possible before they start saving, or are these activities that should be happening at the same time?
Yes, definitely you need to write down. You can't have both ways at the same time. You can't have them simultaneously. So you just need to make sure that, okay, my monthly expenses, I've got rental or I've got bond payments, I've got medical aid, I've got insurance, I've got all those things, including your bank charges. So you need to make sure that you have a list of that. That at least is the roadmap for your financials, so that your finance, so that you know that when you receive the income, when you have said groceries is 500 rand, you need to make sure that at least you have that 500 rand. Because if you overspend and you are now spending the money that you don't have, and that means now you are going to be run short. going forward. Before the month end, you won't have the money. So you will be short already. So this will be a recurring thing that happens all the time up until we get to December. So now it's going to be something that it happens year in and year out. And yeah, it becomes a bit difficult for you to recover, and it ends up overwhelming you. So by doing this also, you are also avoiding to be going and asking for credit facilities for unnecessary things or for the minor things, you know, like things like things like the minor things. Say maybe, for instance, if you know that you want to, your main goal for this year is to renovate or to build a house or to install furniture, you need to make sure that you have on a monthly basis, you plan, you write those down, and then you give yourself a time frame that by this time I need to make sure that I am starting to pay. So you create another account where you will be able to save. So this will avoid, or this will prevent you from going to the banks and asking for money. You know, it's always better when at least you also have a positive cash flow.
I found this statement that you made quite interesting, saying that one cannot, you know, be servicing your debt and putting savings aside at the same time. Are you then recommending that one pays off debt before they start saving, but also acknowledging that there's some debt that one cannot really be paying off, like your home, for example, and your car? That's not really the kind of debt that the average South African can pay off now. You've given, you know, a good 10, 15 years sometimes to be able to pay that off. So what are the types of debts that one really must be getting rid of to ensure that you can then take that money and put it towards your savings? The unnecessary debt.
Correct. It will definitely depend on the kind of debt you are talking about. If you are talking about a bond, obviously that is like a huge lump sum of money that you need to be paying on a monthly basis, say 20 years or even over that. So obviously that is another story, but I was just talking practically about, you know, small accounts like your clothing items, your entertainment, so because that is actually most of the time, those small debts that we have, they actually block us to attain the bigger, you know, the bigger debt. Say, for instance, now, if I'm falling behind with paying my account, and now at later stage I feel like I qualify to be buying a property. So, and that will block me when it comes to qualifying for a credit, because now I was not paying properly, because they look at your credit record as well. So I'm just basically saying that try by all means to pay all your small debts before you can say I'm going to have saved money, because what's the point of you not paying that but at the same time you have money saved? You know, so
yeah, definitely. Let's take a look then at investments. When does one start looking at investments, and how do you choose what to invest in?
Yes. So investment, it can happen in many ways. You don't have a time frame to choose. You need to choose from day one. As soon as you receive an income, savings and investment are the things that we need to prioritize as soon as we have an income. So, but you need to start. Hence, I was saying earlier that you need to treat your savings or your investment as like a form of an expense, because you need to know that, okay, I'm earning this much. Every month I need to take away 30% of it and save it or have an investment. Obviously, depending on why you need that kind of investment. Do you need investment for your children, studies, or any other, like it will depend, it definitely depends, but you don't have to start later or as soon as you receive an income, you need to make sure that you start doing the necessary arrangement for your investment and savings.
Perhaps let's try and demystify this word investment. What do we mean when we talk of investment, and what are the type of investments that are available that one can actually take?
Okay, so investment, obviously we have the bank. You can start with the bank and look at the available channels that you can start investing in, whether it's an investment account or nowadays we have the online the cryptocurrency. You can also decide to invest in those. Know that, okay, investment, because normally when we talk about investment, we talk about long term. So this will be, you know, that I need a certain kind of vehicle in 10 years time or in whatever period. So you make sure that you save money towards that kind of project. Know that after 10 years, at least you have available funds for you to obtain that equipment or whatever object that you want to obtain at that moment. So investment, when you talk about investment, you talk about long term. So the best way I can say, you do your research. There's many channels that you can start investing in, or you can also do it via the banks. They also have various types of investment that you see which one suits you, because obviously it will also depend on your income, how much money you get on a monthly basis.
Mr. Dikeledi Solane, thank you so much for that financial advice on how to get your finances up and ready for 2022, getting out of debt and starting to look into savings and investments. Thank you very much for that.